It's very fitting for the times. We've got a very high gold price. We can get very good recoveries, and we've seen some of those recoveries from the column leach test work that we did. We're targeting here a potential operation that'll do between 80 and 100,000 ounces a year of gold production. We're working now on that preliminary economic assessment for the purposes of redevelopment. Expected to have that out within the next 2 months. All of our resources are located on private patented claims, and that means that we'll run through a simpler process. This is a family and a business that's had a lot of success in the global mining precious metals space. They've taken an initial 5% stake in Revival Gold. With respect to valuation, look, we're trading at $7 an ounce in the ground right now.
In this video, we will be doing a deep dive on the Mercur Gold Project, one of 2 projects in Revival Gold's portfolio. Of course, we have already done a great first overview on the entire Revival Gold business case. The link to that will be in the description down below. Now, with all that out of the way, thank you for swinging by. I appreciate it. Perhaps we can get started with a short and sweet, high-level overview of the Mercur project before we start zooming in.
Thanks, Dane. Really good to be back with you. Exciting times at Revival Gold. We just put out a news release with some details around the project work we're doing on our Mercur Gold Project in Utah. This is in the western United States, and recall that this is a heap leach project, gold producing project that we're developing. It's a past producer, one of the most important mines in the United States over the years. In fact, this project was developed initially in the 1870s, prior to the founding of the state of Utah. And it's had this illustrious past with Getty Oil Company, Barrick Gold Company, building their businesses on the back of this project and what it's produced in the past. 2.6 million ounces of past production from the Mercur Gold Project, and we're looking to bring it back into production. There's a resource of about 1.4 million ounces, 1.6 million ounces of gold, and we're working now on that preliminary economic assessment for the purposes of redevelopment. Expected to have that out within the next 2 months.
Great, you appreciate that, and perhaps we can dive into that advancement work you are doing right now. That PEA, what are you looking at with this project to really advance it, to take it to the next step, to restart it?
Yeah, so this is, again, storied past on this project. And what we're focusing in on is the current resource. We've been remodeling that resource, building up the geological models, de-risking. We are looking for a more robust resource, which means we're being a lot more choosy about what blocks fit into the model for the geological resource, and making sure that those blocks are part of a mine plan. And so that's the next step of the process. Once one has the resource, you work to put together a mine plan in concept around what we might develop. So that work is going on right now. And as part of that work, what we like to do is do what we call trade-off studies to look at different locations for equipment, for plant, the sequencing of the pits. There are 2 different mineralized locations on this project area, the main Mercur area and the South Mercur area. They're separated by about 5 or 6 kilometers. So we want to be able to optimize what we're placing on the site as part of this preliminary economic assessment. The overall objective is an open pit mine that produces gold from an ADR, a gold processing facility, through heap leach recovery of the gold. So the ore is mined, it's placed on pads, crushed and then placed on pads, and then the chemicals are applied to the rock. And of course the gold comes out with the chemicals and then is extracted from the solution to produce gold bars. The solution then is recirculated, so we don't waste anything here. We recirculate those fluids and extract more gold and continue the process. We're targeting here a potential operation that will do between 80 and 100,000 ounces a year of gold production. And we think this is going to have a 9 to 10 year mine life in this first plan that we're putting together. So really exciting, lots of work going on right now, and it's coming together quite nice.
Yeah, a lot of threads I need to pull on there, Hugh. Thank you
Yes.
for that context. Of course, 80,000 to 100,000 ounces, enormous with the current gold price of above $2,900 an ounce. That would be enormous revenues and truly transformative for Revival Gold. Perhaps we can quickly touch base on heap leach. Of course, it's a well-known strategy within the mining space. Perhaps you can touch base why you're choosing that strategy compared to, for example, developing a full-on SIL plant where you're doing cyanide inside of a circuit. Why are you going the heap leach route for the viewer at home?
Yeah, good question, and particularly given the history of this project, because of course, gold has been produced from both a CIL, carbon and leach process in a mill, so in an enclosed mill building. It's been produced through pressure oxidation, POX, and it's been produced through a dump leach. That's where the rock is not crushed, but it's put on a pad, and solutions are applied to pull the gold. So we've had all three types of processing take place on this operation. And in fact, we've had both types of mining take place here. There's been underground mining. Some million ounces of gold has come out of this project in the past at about a third of an ounce per ton gold, so quite high grade from underground mining. And we've had open pit in the more recent past. Open pit mining by Barrick Gold produced over 1.5 million ounces of gold. So lots of history with this project in different kinds of mining, types of mining, underground, open pit, and different kinds of processing, mill, POX, and leach. So your question, why did we choose heap leach for this project and at this time? Number one, because it's straightforward and it works. We know it works. We've had, of course, the past experience of dump leach processing on this project. We think it's very fitting for the times. We've got a very high gold price. We can get very good recoveries, and we've seen some of those recoveries from the column leach test work that we did last fall. Recall that we got 84% recovery from heap leach on crushed material down to 1/2 inch, and that gave us an 84% recovery. So the process works. It's been proven on this site before. It's relatively simple, open pit mining, crushing, placing on a pad, and applied solution to extract the gold. And that keeps our capital in a reasonable place. We're not talking about building a very expensive capitalized operation in this first phase. We do see some great future here in terms of exploration and the possibility of potentially bringing a plant, processing plant in of a mill scenario, CIL or other. But right now, with what we've got, we think this is a really efficient, straightforward, and relatively low-risk path forward.
Makes complete sense. Cheaper startup, of course, very lucrative if you have this resource in place. Perhaps we can talk about some of the work you have been doing behind the scenes. In your news report, you reference initial program of exploration data compilation. And there's multiple targets that are being highlighted there in your resource. Of course, you already have a resource. You're talking about 9 to 10 years of mine life at 80 to 100,000 ounces production. That seems quite substantial. You're already preparing exploration work. What is the rationale behind that? And what are we looking at? What are the targets? What is the potential?
Well, this is one of the great things about getting involved in a explorer developer. As opposed to just buying gold bars and putting them in the vault, we have what we call real option value. That is to say, we have the ability to expand the resource as the gold price goes up and economics improve. But we also have discovery potential, and we want to be always looking at the possibility to expand the resource that we already have. And we see opportunities for that. There are 3 areas in particular that, right next door to the existing resource that our geologists, led by Chief Geologist Dan Pace, are narrowing in on. The South Sacramento area in the northern part of the project, the main Mercur rover area, and then down in the south Mercur area. And all 3 of these targets are places where we think we can have a near-term opportunity to add to the current resource. Now, we haven't defined the specifics of the programs yet, nor put those in action, but we have the targets, and I think as the next few months roll on here, we'll start developing up plans and specifics and come back to you and your audience, Stain, to talk about some of that. The really exciting potential on this project is on our West Mercur limb of the anticline. That's on the left side of the screen of the page here. We've got some 10, 15 kilometers of strike where we've got favorable geology and where we really haven't had a lot of deep drilling. Typically down to about 400 meters with the drill holes. Actually half that, 200 meters, some down as deep as 400 meters. But we really haven't got down below that, and the drilling down to 400 meters is just a handful of holes. So this is really interesting potential for us, and especially given the higher grades that we know have come from this project in the past. And there hasn't been a lot of modern exploration on this west branch of the property position. I take you back when we assembled this ground position through the predecessor operator. It was a staged approach over a period of about a dozen years. And this is a land position now some 6,300 hectares that is for the first time together in one company's hands. And obviously we can think more broadly about the geology and the opportunities around that. And you can bet that our geology team is thinking about the potential, not just close to the existing resource, but beyond in this big Carlin-type deposit.
Yeah, the history there is very interesting, you, and we could spend an entire video talking about how you made this company be and the background behind that. If I quickly summarize the exploration thesis, if I understand it correctly, is there some low-hanging fruit on your east trend that you want to explore to potentially add some tonnage, some grade. And there's also a trend on the west that potentially could be a parallel trend that we're looking at that really is the blue sky potential. Perhaps a bit longer term, a bit more risky, but that's really the blue sky potential there.
Well summarized. Sorry, I just want to go back to the history here. I can't help myself, Stain, but this is fascinating. So the original, the gentleman who was the original developer of some of these claims was a tremendously successful man and did all sorts of things around cattle ranching, homesteading, all kinds of businesses, including mining. But the descendants of this gentleman, going back now, I guess it's 4 or 5 generations, are still owners of Revival Gold through some of the properties that we have claims in here. And there's some 150 descendants that are part of that ownership interest. It's a small interest in the overall Revival Gold, but it's fascinating history. And that family, has a great legacy as a result of the early homesteading of the gentleman who was involved in this project back in the late 1800s.
I can imagine. That is an amazing history right there. Perhaps something to also touch base on, this project is mostly on private land, if I remember correctly. You also referenced in your news report of advancing the Mercur project permitting. Perhaps you can take us through how that would look like timelines-wise, how the difference is between private land versus public land in the US, where you're located at, and how that would look like in the future.
Very important distinction between private and public land when it comes to permitting in the United States. Public land owned by the federal government, leased out to companies like Revival Gold for the exploitation of the resources under a multi-use framework. And when one owns resources leased through public lands, one has to go through a federal, what's called NEPA, National Environmental Protection Agency, process for permitting. That can be complicated. It can be complicated because of the layers of bureaucracy, the regulations, and the steps involved. And so our preference, when we can, is to be working on private ground. And indeed, that's the case with the Mercur Gold Project. All of our resources are located on private patented claims. And that means that we'll run through a simpler process. It's made a lot easier, too, by the fact that we're in a semi-arid location. So that means we don't have water on surface or in the ground to concern ourselves with. We have sufficient water from ground, from water source wells nearby to operate the processing, but we don't have to worry about water control management on the site, and that saves us a ton of time in terms of our baseline data collection for permitting purposes. We will permit through what's known as the Department of Oil, Gas, and Mining state government entity in Utah that coordinates all of the permitting aspects related to air, related to water, related to noise, related to dust. And so we can do that in a relatively efficient process with the state government. Bottom line, we think we can do that in a period of less than 3 years. I don't want to get in front of our engineers and all the technical work that has to take place to develop up the schedule. That's being done in parallel with this preliminary economic assessment expected within the next 2 months. And I'll be able to talk in more detail with you about that, Stain, once we've completed that work.
Great, Hugh. Thanks for that overview there. Last topic I would love to touch base on the Mercur project is pit optimization. You referenced it at the start of this conversation, that it's required to develop a mine plan. What I want to touch base on real quick is also the potential to actually up your gradeage a bit. The grades here are very mineable, of course, compared to mining averages. But you're doing that pit optimization. What is the rationale behind it? Is it really logistically driven, or is there also potential to pocket these higher grades pockets to up the gradage, up the recoveries, and through that profitability?
With respect to grade, I think this is a pretty consistent grade, which is actually a good thing when we're thinking about mine planning and optimizing things, because it means that we don't have to work around pockets of mineralization. We have a pretty consistent grade here, which is a good thing. We will focus the resource through the process of building out a resource for the PEA. That work is laborious. We've remodeled all the geology. We've brought in metallurgical and recent test work to be able to do that. And as part of that process, we're going to get a lot more confidence in the resource that we do have. I don't expect the grade to move very much. I do expect a more compact resource and one that we can feel more confident in. But you mentioned metallurgy, and I think this is a real opportunity for us. The prior understanding and estimates that were used for metallurgical recovery were in the order of 65%, so 65% of the gold in the ground able to be recovered from the material. We think we're going to be higher than that, and that's on the back of the test work that we've done to half-inch crush, which is the size of the material that will wind up on those pads I was speaking about earlier for heap leaching. But that's a real opportunity for us. And then beyond that, as we think about some of the higher grade material at depth, there is the possibility of, as we spoke about earlier, bringing in a mill and getting even higher recoveries still. So this is a work in progress. What I'd say to look out for in terms of our PEA is the recoveries that will be better than that 65%, certainly. And I think we'll look for a resource that's got much more quality, much more robust aspect to it. And again, we're looking to produce about 80 to 100,000 ounces a year from that plan over a 10-year mine life. So you can get an idea of, generally speaking, where we're at right now. That would be a wonderful new mine in the Western United States, and at a time when the gold price is rising, couldn't be better placed.
Yeah. Thank you for that great overview, Hugh. And of course, investors should compare this to a market cap of about 70 million Canadian dollars right now. So if we're talking about 80 to 100 million ounces a year in production of gold at the current gold price of $2,900 an ounce, that could be truly transformative. The resource you have is also truly outstanding. Now let's switch gears towards your strategic placement with Dundee Corporation. Of course, a very well-known name in the space. Perhaps you can tell us, what is it all about? Why have they decided to invest?
We're really happy to have Dundee on board. This is Dundee Corporation, not Dundee Precious Metals. There's an interesting connection between those two names, though. And the wonderful thing about this group, led by the Goodman family, they've had a tremendous track record over the years of creating some of the best precious metals companies in the world globally. Kinross was put together by the Goodman family originally. We also have Repadre Capital, royalty business. Dundee Precious was created by the Goodman family and the family holding company Dundee Corporation, and then several others, Sabina Gold and Silver being another. And so this is a family and a business that's had a lot of success in the global mining precious metal space. They've taken an initial 5% stake in Revival Gold. They've done a ton of work to understand the value underlying that investment, and I think that can give retail investors, high net worth individuals who don't have access to the same technical professionals and due diligence capabilities, some confidence and comfort around their own investment in Revival. And I think for the longer term, what we see here is a technical and financial an ESG partner that has proven skill sets in the global mining industry. So it's not just giving confidence to the work that our team has been doing and the projects we have and the potential around the business, but also strategic insights, access to capital, which will help drive the next leg of growth. And we're really excited about this relationship with Dundee Corporation and what it can deliver for all of our shareholders.
It is very exciting and, of course, a huge vote of confidence from them. I believe a large part of the Dundee story, the Dundee Corporation story, like you pointed out, is to help develop the stories as well. Perhaps you can help outline where they could fill in your team as is, where their expertise might be super handy for Revival Gold to take this project to the next step.
Well, I think first and foremost, strategic insight. Dundee has a tremendous flow on ideas, capital providers, and so that's really important. The strategic insights into the market and how best to optimize on our business plans from a financial perspective. Access to capital, really important to growing our business. And thirdly, and perhaps most importantly, I think some of the technical insights. They've got some really, really strong capability. In particular, Dundee Sustainable Technologies has this wonderful suite of folks who work on metallurgical recoveries, optimization, some new technologies. We've already done some preliminary work with Dundee Sustainable Technologies, DST, out of Montreal, Canada, on our material at Beartrack Arnett, and there's some really interesting technology there that we're looking to further explore in processing and as with replacement to cyanide in some processes. So this is pretty interesting stuff, high tech. And beyond that, the Dundee folks have a lot of expertise in mine optimization, geological modeling, and that's going to be useful to us as we think about plans going further and how we optimize our business.
Great overview, Hugh. Thank you there. Interesting to see those synergies outside of just capital. Of course, also nice to see Revival Gold capitalized for the next couple of months. Perhaps to end off this video here, we can quickly touch base on your team, actually. We haven't really talked about that thus far yet. Perhaps you can take us along. What expertise do you currently have in your team? I know they're very busy currently. Perhaps you can outline who is part of it, what is their background, what is the track record?
Yeah, we'll look forward to introducing a couple of the folks to your audience. And they're off the hot seat with the PEA and the resource work that's going on right now. But look, our technical team is led by John Meyer. John's a wonderful guy, our VP Engineering and Development. Lives in Boise, Idaho, in the western United States, has a background with Barrick Gold, and then was part of the discovery and the formulation of a development plan for the Fruta del Norte project in Ecuador. Huge success. That's where I got to know John at Kinross Gold, and John was with us for a while at Kinross. Excellent leader in technical areas and beyond. John then went on to be the development VP for Perpetua on its very massive project in Idaho, so direct experience in the state of Idaho, also in Utah with Barrick, and that's very relevant to us, of course, not just with engineering, but also with permitting and optimization and working with state governments. In fact, John's on the board of the Idaho Mining Association and a real strong contributor to state policy from that viewpoint. The other person I just want to mention quickly is our chief geologist. I did bring his name up earlier, Dan Pace. This is a mine finder. In fact, Dan was part of the discovery of the Silicon project in Nevada, which is now AngloGold's big North American gold project under development, some 10 to 12 million ounces of gold, I believe, already. So from a grassroots discovery through to ultimately Anglo's involvement, Dan played a big role there, and he's come to us to find more gold in big deposits and big geology in the western United States. Dan's a master's geologist at Reno, Nevada. He's a wonderful guy, lives in Salmon, Idaho, next to our Bear Track Arnett project with his family, young family. His wife is a teacher in the high school, so really ingrained in the community there. And Dan's a data-driven explorationist in the modern sense, has all the current tools at his fingertips, and has put together a team that I think is one of the best groups that any companies have. Work well together, sleeves rolled up, discovering gold in a way that I think is unmatched in our part of the world. It's really spectacular what these guys have done. Over the years, Revival Gold has been finding gold at a finding cost of less than $6 an ounce on our Bear Track Arnett project, and we see the same potential for discovery at our new Mercur project in Utah. And of course, we're marching forward with economics there, but we'll be continuing with the exploration and all that under Dan's leadership.
Great, Hugh. Thank you for introducing the team there. Excited to chat to them over the coming months. Last topic I would quickly like to touch base on is your current valuation. Of course, in your slide deck, you referenced 31 ounces of gold exposure per 1,000 shares of Revival Gold. Perhaps you can take us along what that current EV per gold price would be at the current share price, and also what the big news flow, in your opinion, that investors need to look out for over the coming months is. Of course, we've talked about the PA a lot, but a quick summary from your side to end it off.
Sure. News flow, we're very much focused on this preliminary economic assessment, which we'll have out in the next couple of months. I do see some strategic activity on the horizon over the next 6 months. We have a lot of interest in what we're doing. Obviously, we've got a new partner with Dundee, and so we'll have lots of discussions with them about how we can optimize our financing plans and where we go from here, both from Dundee and our others. So we've got some super shareholders, some 45% of the business now owned by institutional and corporate shareholders. So we've got a lot of expertise that can be brought to bear, and input will certainly be taking. So I think those are the key milestones to be looking for. We'll also, of course, be working on our exploration plans and be back to talk about those and where we're going next in terms of potential drilling later this year. So it's a very active time for our team. We're doing some metallurgical test work with Dundee Sustainable Technologies. I mentioned that group earlier, and we'll want to get right on that because there's some really interesting possibilities to bring new science to bear on our materials at Bear Track Arnett and also at Mercur. So we'll do that. And then with respect to valuation, look, we're trading at $7 an ounce in the ground right now. We've got about $170 million of NPV on our project in Idaho. A market cap you referenced in US dollars, it'd be about 45 million US dollars. So you're looking at a multiple there that's very attractive. 45 million of market cap, no debt, about 4 million of cash pro forma the transaction with Dundee, and 170 million of underlying NAV. Now, that is excluding any value or NAV for the Mercur project. And so over the next 2 months, I think we're going to double our underlying NAV. And if you think about that, some $350 million of NPV trading at a market cap of 45 million is pretty attractive all around. And the trick for us is going to be to optimize what we can deliver, minimize dilution, and drive value to our share price, and manage that whole balance. We never like to look in the rearview mirror at the corporates that are looking at us for acquisition. We just got to work on driving value into the stock through strong technical programs and the delivery execution from our team.
Great, Hugh. Thank you so much for the overview. Very exciting news flow coming up. Thank you so much for your time.
You bet. Stan, it's good to be with you.